All right, wonderful. Welcome, Jeff.
Thank you.
So to start with, congratulations. A little bit of a day. You were here for an IPO, if the rumor is correct.
Well, it's public, I guess, now. So yeah, SendGrid went public this morning. So pretty happy. Invested in that, I think, June 2009. So it's just a reminder how long that journey is to get to an outcome. And now the company is public, and it's just the beginning. I was reminding the teams this morning that it's yet another awesome step in their journey. Do not check the stock price every fucking 5 minutes because it doesn't matter, because you're locked up for 6 months anyway, and go back to work and please get the stock up. Thanks. That was my parting message.
And SendGrid is an email delivery company, which is a little bit different from this. What we'll talk about here at this event, Hardwired.
Yes.
But the previous, one of the previous big IPOs you did was Fitbit.
Yeah, 2 years, 18 months ago, yeah.
Okay, so we'll talk about this in a second, but maybe first things first, a quick word of introduction, starting with your firm, which just got rebranded.
Rebranded, yes. So I started Softtech VC back in 2004. My background is, so like Matt, I'm French. He doesn't have an accent, I do. Born, raised, educated in France, did a startup in the financial services market, spent a lot of time in New York. Eventually got acquired by Reuters, and I was a CTO. So did a lot of projects for them, and eventually moved for them to become a GP of their fund in the Valley. And then 4 years later, started Softtech. And as of Tuesday last week, we've become Uncork Capital, because Softtech, A, was never spelled correctly. B, for someone who's one of the most active investors in hardware, Softtech wasn't great. And then people were confusing us with SoftBank, going like, you guys have like a $93 billion fund now? So it was just a disaster. So Uncork, it's us.
And Uncork corresponds to your side passion for wine?
Absolutely not. It's just about uncorking the potential of the companies we work with.
Okay. So that was just a vicious rumor.
Yeah, you know, people are mean to French people.
So you mentioned that you are one of the most active investors in hardware, which is very true and fantastic. So starting at a high level, want to talk about that general area. So hardware and frontier tech, for lack of a better word, which is really what we talk about here every month at Hardwired NYC. And by the way, I was looking at the list, and we've featured as speakers.
Yeah, thank you for all the work you do to feature our companies.
Yes, I mean it's random. It's sort of crazy. So I was just quickly, we had. Interesting. This actually just disappeared. We had Drone Deploy, Molecule, which at the time was Airware, Looking Glass.
Transformair.
Airware
is the thingy.
That's the flying drone company. Looking Glass, which is here in Brooklyn. 3D hologram visualization. Yep. Tempo Automation.
You should get them back, because now they will show you the true hologram.
Yeah, they did show us a prototype. That was actually very cool, very interesting. But anyway, quickly. So Tempo Automation, Nima, August, the Locks, lock company which has just got acquired, and Pi Charging tonight.
And Pi Charging tonight.
So we'll have.
And I have a few more of my sleeves for you.
Okay, that you'll send us. So thanks for investing in all those amazing companies which have come up, which did very cool talks here. So. So hardware is, as we discussed many times here, hardware is hard, and not that many investors feel comfortable investing in this space. So what draws you to this space?
So in the very early days of Uncork, back in 2008, after 4 years of investing only in software, I had this question, which was, can you actually make hardware companies capital efficient the way we made software capital efficient? And back in 2008, no one was investing in hardware at all. And so it was hard to test a thesis if you don't find something to invest in. And lo and behold, a few months later, James Park and his co-founder Eric showed up with the prototype of the Fitbit, which was a big clunky piece of plastic, the way we always sort of have to imagine how beautiful the device is going to be. When you invest at early stage, it's always like a big pile of crap, electronics and everything. And in the case of John, big coils that were taking like so much space. And well, they were compelling. It was an interesting idea. And I thought the only way to validate the thesis is to invest. And the only question is, how do you validate market demand for something that doesn't even exist anywhere? And they presented at TechCrunch 40 a couple of months later. And basically, I saw Evan Williams, co-founder of Twitter, and Kevin Rose be so excited about the concept of Fitbit and the design and everything that they had put together in a couple of months for the demo, that I was like, that's my validation. A really bad idea, by the way. Like, this is absolutely not market validation at all. But anyway, so I invested, and then as the complete noob I was, I mean, as noobish as they were in terms of actually building a hardware company, because you don't know what to expect when you invest in hardware for the first time, which is how hard it is in terms of design, manufacturing, getting everything done, getting the quality levels, the transmission, the Wi-Fi connectivity, the antenna. Well, I mean, it's just horrible. Not mentioning also all the validation tests, regulations you have to take into account. And the answer is no, it's not capital efficient at all. But still, I've got lucky to invest in the most successful kind of company in the hardware space, which was super hard to finance. Every round was a nightmare. They almost died at the Series A, and I had to beg, literally beg, Brad Feld to take a second look at Fitbit, and thank God he actually invested on the back of that.
And does hardware get easier? So you're one of the few people, because you invested so early in the cycle, at least in this cycle of hardware production, you're one of the few people that have seen the whole story from beginning to end. Does it get easier? And the reason why I'm asking is, I remember when Fitbit went public, I looked at both the Fitbit S1 and the Box S1, because Box went public around the same time. And it was actually kind of amazing, because you know the numbers, I don't exactly remember them, but I want to say Fitbit raised something like $65–70 million. It was a profitable company.
They went public on $32 million invested. Actually, they burned $32 million to actually go public.
They still had it in the bank. Whereas Box, which is also a great company, had raised hundreds of millions, was immensely unprofitable. Yep. Yes.
No, it was what Eric and James did was really sort of remarkable in terms of relative capital efficiency of the model, because the answer is at the beginning it's not capital efficient, but they actually became extremely profitable and capital efficient. The problem is, to your point, it's never easier. I mean, you know what to expect. You try and point your entrepreneurs towards the issues that you faced. But because we sort of move around so much in terms of sectors, we discover new random regulations or issues or challenges that we haven't seen before. So I literally learn a new thing every time I invest in a new hardware, and now, even worse, frontier tech company. Because like once you've done enough hardware, you know a lot of the traps and pitfalls. But when you go into like brand new categories for you, like we've done an AI chip, like I have no fucking idea as to what you're gonna face when you try and build a damn thing in a fab, and try and get that financed, because the people who actually invested in fabs have been retired for 20 years. So you have to basically assume that, I guess you have the lunacy to expect that because the team that you've invested in, the vision of the company and the product potential, you will find investors and you will try and you will convince them. And the good news is that because we have a track record of success in those spaces, people sort of give us the benefit of the doubt. And so far, we've pretty much managed to get everything funded.
Is that from your perspective one of the...
I'm still working on Matt to invest in my first hardware or frontier tech company, by the way.
That will come up soon, I hope.
Super convinced.
Would love to. We'll take this offline. It'd be an honor. Next check is indeed one of the big problems, right? What are you seeing? Are you seeing that people at the Series A or Series B level are increasingly willing to be experimental in frontier tech, or that they talk a big game but they actually don't really do it?
So I think hardware is really hard these days. Not to scare any of you guys who is building a hardware company, but getting a Series A, $10-ish million for companies that typically don't have any real proof point is really, really hard, because even though it's easier and cheaper to get to manufacturing than it was years ago, you don't really have any sales data by the time you have to raise a Series A. So it's like a pre-order campaign. It's some reservations, there's a lot of belief behind the entrepreneur, and you have investors who are very willing to take the risk, and it's, thank God they're there. Foundry Group being sort of one of the main ones. But, Foundry is almost, I wouldn't say tapped out, because they are not, but they're over-allocated on hardware. And therefore, for them who are very comfortable with the space, they will say, well, we just can't have too many hardware companies in this fund. And suddenly you have one of your main investor that goes away. So you have to be very thoughtful about funding cycles. And to be honest, right now, I've tuned down the hardware aspect. I've only done one hardware investment in Fund 5, but I've tuned up Frontier Tech, because Frontier Tech has the promise of the future. So when we talk about AI chips for autonomy, as opposed to going like, ugh, people go, ooh, tell me more. So you basically sort of try and tempt them, because at the point of investment for Series A in those new categories, there isn't that much in terms of validation.
Okay.
It's real. It's what I would call sort of real venture capital, or capital risk, as we,
Yeah.
call it.
No, it's interesting, right? In some ways, it's a little bit of a throwback to what it was 20 years ago, right? When you needed $5 million to buy servers just to see if you had a business.
It's not all the frontier tech, because the frontier tech has. I actually referred to your definition of frontier tech in a talk I gave, which was what does it mean to invest in frontier tech? And so literally, I'll send you the presentation. I quoted your piece, which was here is the hodgepodge of technology and sectors and whatever that you throw in frontier tech, and I don't put blockchain or Bitcoin in that, but it's very diverse. And there are areas which are enormously sort of challenging, and others which are like people saying AI is frontier tech. I will call bullshit on that, because everything has AI, like a bit of machine learning, a bit of deep learning, whatever. It's not frontier tech. If you innovate in the space, if you build a damn perceptual chip, then yes, you'd better be like at the edge.
Okay, so let's dive in a little bit. So in that world, what do you find particularly interesting? And I guess the side question is, or the related question is, are you thesis driven, or are you generally favorable to the space, and then you see great entrepreneurs that come to you?
Yeah,
So, for example, are you more are you interested in these days in consumer stuff, in enterprise stuff, when it comes to, I don't know, the Internet of Things?
So if we go back to the thesis of Uncork, we always sort of look at phenomenal entrepreneurs building really differentiated products in market that could turn into something really large once they have established themselves. Because when you go into frontier tech, like there's no market by definition. And funny enough, Fitbit in its time was a frontier tech investment. We just called it new areas, because frontier tech wasn't sort of there. And it was truly something disruptive, brand new. It just wasn't like super cool like space tech or AI chips or whatever. So by definition, when you go for the super early, like bleeding edge technology, that's what defines your frontier tech, and eventually you become like a commodity. Eventually, after the adoption cycle has happened, and so it's all about figuring out what that bleeding edge is. And for us, we sort of look at entrepreneurs, ideas / products, and market potentials, and we're like, not for us, not for us. And it's super hard to figure out what we're going to do because you can't second guess us because we don't even know. If you had told me, dude, you're going to invest in a chip, I would have like, hey, no way. It's too hard, too expensive, like $38 million to build like a, the environment to actually build the chip. Oops. But when I met, the three guys, and no, the company hasn't been announced yet, they were just freaking geniuses, and they are, specialists in the space. And the pitch, the vision of, those chips being in every freaking autonomous car in the next future, in the near future, whether it's level 3, level 5, was compelling. So it's worth the risk.
Mm-hmm. And so you've invested in a bunch of different things. So let's just take a few areas. Mm-hmm. For example, drones. So we had drone deploy, yep. I guess, a long time ago now. What do you think about the area of drones? I mean, it sort of felt like, people got super excited, and now there's a little bit, less hype, which is the nature of those things. Where are we in there?
So you're going to enjoy this. The reason why I picked Drone Deploy as my investment in drones is because it's SendGrid for drones. So it actually doesn't build a freaking flying thing. It just operates it. It actually doesn't care whether you're running a DJI, a Parrot, or something, whatever. Because for some reason, at the time, I wasn't confident that all those sort of drone building companies were going to go anywhere. I had no clue that DJI was just going to take over the market in one fell swoop, but I just wasn't comfortable trying to go for one of those vertical solutions that was, okay, well, here is my agriculture drone, and here is my construction drone, or whatever. And so I was looking for a piece of infrastructure, and I like the picks and shovel we do. 50% of what we do is SaaS, right? So we love like the infrastructure aspect. And when I met Mike, Jono, and their co-founder, I was like, yes, I get this. This is basically SendGrid for drones. I'm in. And they were like, huh? What do you mean? We don't send emails. No, that was figurative, like layer. And so that's why I'm thrilled to have done this, because now the company is doing extremely well on the basis of drones being adopted in different industries. And, they have the base platform and then the different adapters for construction, agriculture, and so on and so forth. And they just lift with the adoption of drones in the industries. So I like that. And when we talk about my space investment, it's sort of like that as well.
Okay. And so what about consumer stuff, connected IoT? Is that done now, or is that a?
I would say,
because I'm sure you see absolutely every single one.
We looked at a lot, and we've done quite a few at the edge of healthcare and devices. So NEMA, the food sensor, Halo, which is the neurostimulator. So it's the whole concept of neuroplasticity, where if you send microcurrent in your brain while you do something, then you will create new pathways. So the current product helps you develop skills, and it works. So athletes are using that, sharpshooters in the army as well. Oops. So those are things at the edge of two markets. I would say the pure play connected home. If I like, the lock was an interesting bet. Super thrilled to work with Jason and Yves Béal. And I think, to be honest, without Yves and Jason as entrepreneurs, I would probably have passed on the sector. So we sort of try and find like quasi-exceptional people when we invest in those categories. That sort of drives a lot of our sort of decision making, because on the basis, like, you see these people, and you like, yeah, I'm just going to throw money at them because that makes sense.
Okay, and what about AR, VR, 3D? Is that interesting, or is that now the bottom of the curve?
We've done 3 bets in the space. So you mentioned Looking Glass, and Sean and Alex are just freaking geniuses in the space. Like they literally will deliver to you the hologram, and I keep on saying, put freaking Princess Leia as a demo, damn it, because they keep on sort of putting something else, right?
Yes.
We have this really interesting company called Vivid Vision, which uses very standard VR technology to help people who have amblyopia, which is crossed eye, lazy eye, which typically you can't really fix after the age of, I think it's 14 or 15, but you could literally be 60 years old and use their tech and get your lazy eye fixed within a couple of years. So it has nothing to do with hardware. It uses off-the-shelf, like Samsung Gear VR, your Rift or your Vive or whatever. But it's a very interesting sort of money-making application of VR technology, which is incredible. And then we have a third stealth investment in mobile AR infrastructure. Once again, in the layers.
Horizontal. Great. So you just mentioned, even Jason at August. I guess obviously the team is particularly important when investing in areas where the team is just about everything because you have nothing else to look at. What's a good team? Is that people that other than the obvious, very smart, ambitious, all the things, but is that people that have a hardware experience, or what are you looking for?
Some do, some. I think there's always sort of a unique. There's a unique insight aspect. There is someone on the team who's sort of quasi-exceptional. You mentioned Molecule, which is our air purifier. So Dr. Yogi Goswami is literally one of the best scientists in sort of solar technology in the US, and he invented the core technology that is used in Molecule because Dilip, his son, had massive asthma attack, and he said, I can't believe that no one has invented something better than HEPA filters, which is a 40-year-old sort of technology that just absorbs all the crap that is in the air. I mean, not all the crap, some of the crap. And then as soon as you change the filter, pushes that out. Here, he literally invented something that wipes out all the allergens. And it just came up with it and productized, and then his son and his daughter, who are both super freaking smart, just went for it and built, the go-to-market machine that is turning, Molecule into something extremely successful. You will see John talking to you about Pi, and John's co-founder, Lishan, was the best student out of Tsinghua University for the past 10 years. Like, just think about it. Like, Tsinghua University, best student, past 10 years. Boom. And the dude is, like, super nice, but incredibly smart. And he invented the technology that, allows the beamforming that essentially is at the core of the technology. So those are, like, the AR thing, same thing. Like, to be honest, any MIT students here or ex-MIT? Cool. So we found that ex-MIT PhDs or students were pretty freaking good at the space. And if I think 4 or 5 of our startups are ex-MIT.
Interesting. And at the seed level, do people need to have a prototype of some sort?
So for a chip company, they had a software model of why the chip will be so much better than NVIDIA. John, would you show like a picture of the coils? No? Yeah. So they had sort of this ugly prototype where they showed how they would actually get an iPhone charged if it was very close, and the coils were literally taking the entire table in the office. Ugly prototype. It's really what you get. You just have to sort of trust the vision of the founders, see that they have the experience or the expertise that tells you they can actually deliver, and then walk back with them and see what proof you have that it can actually make it happen. And sometimes it's just pure belief and go like, it sucks, but I'm going to do it anyway. And sometimes, you know, there is a little thing that shows you it's feasible, but it's not always obvious to get this through a partnership. Because obviously, a partnership as VCs, we have to convince, you know, they have to convince us, and then we have to convince our other partners. And some of the most, I mean, getting pie through the partner meeting wasn't easy. We love you guys, right? But
any repeated pattern and lesson learned with all those companies? I mean, have you found?
Yeah, execution. That's what kills you. Like lack of focus, trying to do too many things, too many products, not paying, you know, like absolute minute detailed attention to every single thing that your manufacturer, your, you know, manufacturing partner, design partner will do. Because the notion of they would not do something stupid like that is actually not something you can trust. Like we had the case with Molecule where, you know, we had a very specific, you know, set of steps they had to go through, you know, to produce, you know, Molecule. And then for some reason, someone said, oh, I'm just going to add a ring of silicone because why not? And suddenly we have something that, you know, is supposed to help people with their, and that's gone, right? It was in the early days. But filters, you know, all the crap in the air, and suddenly it started gassing. Why? Because the freaking thing, you know, wasn't supposed to be there. And when we traced it back to the manufacturer, they were like, oh, it was because it was easier to just push the molecule down. So you really have to have an awesome director or VP of operations who's going to spend so much time in China and understand every single freaking step of the process to make sure that it's perfect and exactly as intended. Go to market, like how to actually sell this, what's the story, how is it like, we had our founder conference and we were discussing with the hardware group, like how is this hardware, this product going to change my life, impact my life? Like what's going to be the positive disruption that this is going to bring to me? And I think when you see a product like Teforia, which unfortunately just shut down, it was the best tea machine ever. I offered it to my wife for Christmas, and she's used it every single day. But it was over-engineered, it was way too expensive, and not that many people can afford a $1,500, you know, tea maker. So you have to really think about all those components, which is not only is it feasible, can you produce it, but can you produce it at the right price with the right margin? Because once again, bad unit economics, like not having enough margin kills you, because VCs is the first thing they ask you is like, okay, so margin-wise, where are you? So it's really, really hard to get everything aligned to be successful, and then you trip because some shit happens in some factory or some stuff or some whatever, and so it's really, really hard. And then, you know, the regulation, because you think you know everything, and suddenly someone says, you know, there is this obscure thing in this particular, you know, state or whatever, and you can't sell your product or whatever. And so it's you really want to hurt yourself. Like when I see how easy the SaaS stuff is, not that building SendGrid to $100 million in ARR was easy. It was painful. It was difficult, and those guys are heroes to have gone in there. But you don't have the landmines that hardware startups have to go through.
And maybe to close, last question from me, and then I'll open it up to people. So what's next for you? You mentioned space tech. Is that something you're starting to?
Yeah. So I mean, so we're not thesis driven, but we sort of identify sectors that we're sort of interested in hearing from entrepreneurs, right, and get pitched. And so I was really intrigued by a lot of those space tech investments that some of my friends were doing. And the same way, I didn't feel like investing in you know, flying thingies in the drone market. I certainly didn't want to invest in, you know, satellites or boosters or like ever. So I've taken meetings with entrepreneurs who were building, next generation satellites, next generation sensors, next generation like 3D printed rocket engines. But like, how do you test that? Why you try and you launch it and you see if it burns? And I decided to pass on all that. And then when you start digging and saying, so who else should I meet? Who else should I talk to? You meet entrepreneurs and investors, and then we end up being connected with the founders of Loft Orbital, which is this investment we just announced on Monday. And those are two French dudes. We won't hold that against them, and one American, very experienced in the space tech space. So Antoine, the CEO, has worked for Ariane Espace and a bunch of in Airbus and a bunch of other sort of companies in the space. And their vision is to bring essentially the concept of shared resources that we have today in the cloud to space. So they will use standard buses, so that's what they call standard satellites, from people like Airbus or others, launch them using standard launchers from Ariane Espace. So it's going to be standard and cheaper. And then they will put 4 to 7 sensors on the satellite and give to the sensors shared access to resources like power and bandwidth and other things. Because unfortunately, when you're up there, it's not unlimited like it is up here, down here. And they will give you access to those resources when you are over the part of the world that you want to analyze and so on and so forth. And therefore, they will give you access to the resources for a sixth or a third of the cost of launching your own satellites or constellations, and will offer it as a managed service. So to you, as a user, it will appear as an API and a data stream, and will hide the complexity of launching and managing the sensors and the satellites. And so that's potentially going to disrupt space as much as the cloud disrupted, launching companies and products.
Wonderful. All right, let's take
on paper. It's awesome.
Do we have 1 or 2 questions? One here and then one in the back.
I want to link to that mic. That's awesome. We need that in the office.
Yes.
So you had mentioned briefly about sort of the murky nature of Series A in the hardware world. With consumer tech, like, what is there like sort of a through line of like consumer products where you say, okay, about like X amount of units per year or per month with a certain type of growth, like you typically could say that band is what you would expect is like that's definitely a Series A?
Yeah, it's super hard because unfortunately you sort of look backward and you say, okay, it's enough. But our founders try to get this, what's my hurdle? Like John, had the same question. Dilip at Molecule had the same question, and we're like, it's certainly like if you can cross $10 million, it's great, like super useful, of course. And so it's typically if you can get to millions, then it's good. The closer to 10, the better. The problem is it depends on how a given VC is going to think about the market opportunity and what sort of number will convince them, not so much themselves, but their partnership. Because what I found is that hardware investments are so challenging because there's always the naysayer in the partnership who said, oh, we tried this 10 years ago and it didn't work, so just, forget it. That's why having super impressive founders, big vision, big market opportunity, and enough numbers and traction, it's tricky to go into a space like wireless power because everyone wants it, but like how do you quantify it, right? Because and then suddenly, boom, Apple comes up, and here is Apple 8, Apple 10, and no one ever asks the question again because you want wireless power because that's what the phone does.
All right, time for one last one over there, because I want to save time for John.
You mentioned mobile AR infrastructure briefly.
Yes.
I was wondering if you could speak more about that, like what exactly you're excited in within that like subsector. Like consumer, SaaS, enterprise?
So the company we invest in is a SaaS play.
Okay.
But the same way, I'm not too sure what are the use cases that will actually win in early mobile AR. Like I've seen some support stuff. I've seen, some gaming. We don't do gaming or content or whatever. So we always sort of look at, hey, what are the picks and shovels of those native industries? Because we don't do e-commerce anymore, but SendGrid was essentially an investment that said, hey, we know those different categories that we don't really like investing in. We'll need that piece of infrastructure. Let's bet there, and we'll just scale with the industry. So that's the approach we have for new technology infrastructure in general.
Cool. Thank you.
Great. On this note, thank you so much. This was terrific. Really enjoyed it.
Thank you, everyone.